Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. Despite this big 1.23% drop in the market, the big news, of course, is Trump escalating the war. Looks like everybody's back on full military mode. The peace process has been torched, and we are pushing limits. Everything is being pushed. Okay, inflation expectations are higher, interest rates, gold, dollar. We'll see it all, okay, and what it means and how we should look at it as traders going forward, okay. But first, a lot of stuff is happening on Thursday today, okay. This is Thursday, of course, the 23rd of July, and let's talk about the technical picture. First of all, we're still neutral, okay. Yes, we closed below. We mentioned yesterday we can go up, down, up, down, up, down, below, above the 50, up, down, oscillating over the 50-day moving average here in red. Okay, so but we mentioned that we're not gonna call bullish when it's over and bearish when it's under the 50 like we normally do. We're just gonna say that we're in this consolidation zone, so we're neutral. We're neutral at this point. It looks good because it's like a consolidation at highs, but at this point we are neutral, even though there's gap down on the war. Okay, so technically speaking, neutral. Now let's bring in the sentiment. Fear. It didn't drop as far as I thought it would. We were it just barely dropped. The market was literally down over 10 points, and we just barely dropped. Okay, everything's going into the fear, extreme fear. A lot of puts were being bought today. Okay, a lot of puts were bought today. We can see it here. If you want to get more technical on that, we see the total put call ratio on the CBOE is at 101, but it's end of day data. Okay, and the index put call ratio is at 1.06. We've seen in 2026 the highs of the total put call ratio here. This is what we look at, is about 110-ish. Okay, and that has been extreme before it really gets crushed. Okay, meaning that we see extreme lows in the market before the put ratio being crushed means the market begins another up leg. Okay, we have seen it in 2025 during the 2025 crash on the tariffs. It went to 120. So we could still go higher. And this is end of day. Now it's not updated. Tomorrow we'll find out what it is today. So it could be 110 already. Okay, it could be 115. Who knows? Okay, but we're approaching the high levels of this put call ratio here that we see. Here, we might get it at extreme fear because this is again a 5-day moving average end of day data. So that's one indicator that we're coming close to an extreme move, okay? That the sentiment's still fearful as expected after this drop, but I still think this is very bullish because we are just consolidating at highs, okay? And of course, the sentiment indicator that I like comes out every Thursday. Guys, boom, we mentioned it last week. This is last week, go back, okay? You can see that we said, yes, the bulls are there, but it's just 1 week and they're not solidified yet. I'm telling you, if we have a down week next week, meaning this week, the bears are going to come back. And guess what? The bears are coming back. Very, very bearish still at highs. This bodes very, very well for the bullish thesis. Okay. I know it doesn't seem that way after today, but there are some green shoots, even though we are pushing limits. We're at the edge, at the limit of where we're gonna, turn maybe. Okay. So before we begin with the pushing limits, we did have a macro print that is pretty important. Look, initial claims on Thursday, 187,000 dropping. So the macro is doing very well underneath this war time push that Trump is getting us into. Okay, so let's get into the pushing limits. Stock market, Dow drops 500 points as Brent crude above 100. Tesla and Alphabet tank. Remember we talked about those earnings yesterday. It matters what happens today. So those stocks are all down. Okay, so pushing limits. What's the first thing we look at? Oil. Okay. Ripping higher. Okay, it's getting, while Brent is at 100, this is WTI intermediate, WTI light sweet crude, it's at 92. Okay, Trump is going to get worried when he gets to the 100 level. Okay, he's already starting to get worried. Okay, so oil and getting close, not even overbought. Again, we mentioned we can still go higher. It's in no man's land. We can touch the 100 very, very easily if he escalates it even further. Who knows what's going to happen? Okay, and oil is still below the highs, even though it's a double front. We have the Houthis coming in too. Okay, so the war is it's at a hotter stage than it ever was before. and oil is reflecting that. Okay, so that's one limit that's being pushed. Okay, what else do we see? Well, no, not we see the US 10-year. This is the key. Right at the level that we set at 4.72 here. Okay, it did sort of kiss it before retreating. Okay, we're at the Rubicon. We're at the level where, a 4.7% 10-year yield is going to hurt the economy. Okay, but if you look at the SPY, okay, the SPY is still holding in despite these moves. Okay, so you have the limit of the US 10 years being pushed. So what happens is gold. Okay, gold, yes, of course, it's down, but it's not lower than it was before. Okay, it's not at the lows. So it's just consolidating at lows within the 41.68 to 39.23 zone here between these two blue lines, these two support resistance zones. Literally, you can say it hit resistance here and then it went down. Okay, so we're still waiting. Gold is holding up, trying to form a bottom. Okay, we're trying to see a divergence before it goes higher. Okay, we don't know how that goes. Okay, but SPY, like we said, still at neutral, and the bright point of the SPY is the SMH. Okay, semiconductors are down like 1%, 1.15%, as the SPY is down 1.2. As the leading sector, you would expect it to outperform on the upside, and outperform, meaning getting worse, on the downside. It's not. It's holding this neckline. This area that it's still, we mentioned yesterday, the big news that this could be a bear trap, and it's still a bear trap. It's still the potential of having a bear trap move right here. Okay, so the semis are holding up very well. I'm looking forward to doing a trade on mu, but it never came down. Okay, so I want to say that the bright spot of this is that the semiconductors, the leading index of the SPY, is still holding up. Okay, yet we are approaching resistance levels, so, in the US 10-year. Okay, resistance levels right here, the big resistance. It can't break. It's going to be very, very bad if it does. We are assuming that it doesn't. Okay, we saw the put call ratio here at 101. That was at the end of yesterday. Okay, end of today, it could be at 105, 110. We don't know. A lot of bears came in. We saw it. A lot of bears came in. A lot of put buying at the first sign. We mentioned at the first sign of any trouble, you're going to see the bulls retreat and the bears come in. Yes, because we're still very feel for our highs, which leads me to believe that a lot of puts were bought today, and you'll see it tomorrow in the total put call ratio in the CBOE. Okay, so another thing that I'd like to mention is, as these yields are going up, what's happening to interest rate expectations. Okay, so here we are with the Fedwatch tool, and we're looking at September. Now in September, there's a 55% chance of a hike. Okay, only 20% chance that we stand pat. So the market is saying it's really, really pushing Trump's hand. Trump is escalating the war, but now every time he escalates, the market really, really punishes him for it. It's not a done deal. It's still 55%. It has to get to like the 67, 70% area before it's probably baked in and Warsh hikes. Okay, this is very bad for Trump. It's still not baked in. Looks bad though. But for the end of the year in December, there's only an 8% chance of standing pat. Literally, 32% chance for one hike and 38% chance for two hikes, and an outside chance of three. Like at every meeting, September, October, November, one hike. That is a higher probability. Three hikes are a higher probability than standing pat. So this is reflecting a lot of hawkishness. Okay, a lot of hawkishness going forward. 92% chance, whatever it is, 92% chance of a hike at least. And like a 70% chance of 1-2 hikes. Okay, that's huge expectations. Okay, but you want to see like these expectations of hawkishness are just barely affecting SPY, and gold is holding its base here. It hasn't broken down. Okay, this is good news to see. We're looking at the Fedwatch to see what the market expects. Okay, so it's leaning heavily on the rate hike cycle, the rate hike part of the scale. Okay, and this is bad for Trump because he's not going to win the midterms if this is the case. If oil is high, it's over. Okay, so you have these limits that are being tested right now. What's he going to do? We're waiting. We're at the limit. Is he going to tackle Trump again? I think so, but we'll see. We'll see what happens going forward. Okay, so today we did have an important piece of news. We had not NVIDIA, but Intel. The big news was Intel earnings, okay? So Intel, we know we have a put right here. Let's move it to the side so you guys can see clear. We have a put that expires tomorrow, 100, okay? It was trading at around that level today. It went as high as 103.99. So it looks like we were right at the 100, but then they had earnings today, okay? And earnings, they beat, but really they lost money. This is an adjusted figure, okay? So they beat by 93%, and they beat on top and bottom line, okay? But I think in GAAP terms, they lost money, okay? Like if you see here, oops, that's not that. It's really the, if we can more events here, you can see Intel, look, Intel Q2 revenues jump up 25%. But here, Intel second quarter loss is 11 billion. Okay, so this is a gap loss. Okay, the revenues did go up to 16. Q2 is 16. Okay, so the gap loss here is 11 billion. Okay, but if you make adjustments to it, you're actually up. They didn't count something, so you're up by 93%. You almost doubled what you're expecting. Okay, so you did get your 16 billion, but adjusted earnings are up. That's all I want to say. But like, of course, the market likes this. After hours, I don't know if you could see it. It's at 109. Okay. This will expire worthless, this put, and I will write another put on Friday. Once this expires, I will write another 100 put if it drops lower. Okay. I don't know how much money I can get. Depends on how high the IV is, but I will keep writing puts at the 100 level, increasing our break-even point. Now I think the break-even is 101.5 because I am short. Okay, but it's 101.5 because I collected a lot of credits as we were rolling it higher. Okay, so I still don't like Intel. I think it's a crappy company, the worst of the lot. But who knows what happens to it going forward. I just think it's going to go down. Okay, and this it's trading at 108, 109, and went as high as 112. It's fluctuating after hours. But remember, it's not what happens now that matters. It's how it opens tomorrow. If the war escalates, it's probably going to open lower. Okay, just like we saw with Google yesterday. It was opening high. It was showing a higher aftermarket, but then boom, got smoked today. Still waiting to do trades here. Okay, and so you have all. What matters is the next day. Okay, don't get fooled by what happens after hours. We are in a very iffy type of marketplace. We don't know what's going to happen. The fear is out there, and yet look at the index holding up. I think that is the key. We are pushing limits, okay, which means that a lot of the positioning is to one side. We saw it with the interest rates. We saw it with the 10-year yields. We saw it with gold and oil, okay. All of that is pushing the limits of what Trump can get away with in terms of inflation and interest rate hikes. So the market's going to punish him. And the market says here, because it's at high levels, that it doesn't really, it expects Trump to cave in some way. That's what it says here, although the interest rate expectations say otherwise. They say that, nope, we're going to hike. Inflation's going to be massive. This war is going to last forever or a long time. Okay, enough that we need to hike once and probably twice this year. Okay, this year. So you're getting fear in the market. You're seeing it here also in sentiment. You're getting fear in, let's say, the rate market. The bond market is showing that fear, but the stock market is not. It's sort of brushing it away. Okay, who's right? Well, recently it's been the stock market, and the bond market always overreacts to the downside. That's what the trend has been recently. Doesn't mean it's that way now, but I still remain bullish overall because we saw that the fundamentals are still pretty good. Okay, once this war is over and Trump really disengages, this market rips the highs. Okay, that's my feeling. Okay, but let's see what happens tomorrow, Friday. Okay, so I'll see you guys then. Later.